What's up, guys? How we doing? I'm just post this link on Instagram and we'll get it going. One second. Shoveling snow. Yeah, I have snow, bro. I don't know where you're at, but I have snow for sure. We got like 8 inches last night. You're in Connecticut too. Nice. Me too. Fire. Did you know I'm from Connecticut? Let me just post this on my Instagram. We'll get it going. All right. Okay. My bad. I always like to get the post on Instagram right after I go live. There's always a little buffer time at the beginning. Alright, I got that posted. Burger. What's up, Joe? We gotta catch up, Joe. You gotta DM me so we can catch up more. James, what's up, bro? Alright. I'm probably just gonna hop right into it. Well, we'll let the other people get in. I'm gonna talk about the economic calendar to start, like always. Alright, let's drop the EC on here. Take that. Get this to fill up the whole thing. Boom. Alright. You guys know the drill. every single week, the very first thing that we do is check the economic calendar. We're getting a feel for how the weekly candle is likely to deliver. And this is really the start of our process, right? This is really the start of our narrative in understanding how this candle on the weekly and how each day of that week is going to deliver. And so this is the start of that journey of painting that candle. What we see tomorrow is that we have a yen bank holiday as well as zero news. So we have zero red folder on a Monday. This tends to be the case, right? We always talk about Mondays with no news, how Mondays in general are usually accumulation for the weekly profile, and they're just usually lower probability. And it's not to say that we can't expand on Mondays or have high probability Mondays, but more often than not, probabilistically speaking, a Monday is going to be lower probability. And so I'm more hesitant on days like this with no news. On Monday with no news, I'm more demanding of price. You know, I will trade on a Monday. Don't get it twisted, right? I'll trade my model on indices on a Monday for sure if price is showing willingness to move. You know, if price is showing that it actually wants to expand and it feels obvious to me, then I will take trades on a Monday. It's not like some rigid thing where I'm like, nope, we'll never trade. But I'm more skeptical of price, and I demand more on a Monday with no news than I would demand on a day where we have a lot of red folder and so on and so forth. Tuesday, we have British pound red folder and US dollar. JPOW speaks, JPOW testifies, right? 10 a.m. So we have two red folder news drivers here. For those that are trading intraday, crosses or majors, you know, GBP could be interesting then. We also have USD news, which is good to see for indices with my model. We have CPI on Wednesday, as well as Powell again, and then New Zealand dollar inflation. So Tuesday, Wednesday, both have red folder. Thursday is PPI, right? So we have some large red folder news drivers here on US dollar this week for sure. And then Friday, we have retail sales. So it looks like a pretty volatile week. We have a lot of news drivers here, right? We have a big three news driver in CPI. FOMC, NFP, and CPI are our big three news drivers. And so I'll be waiting until after CPI on Wednesday, and then I'll look to get involved from there. Yeah, I agree. It definitely looks like a solid week. And it looks like we could get some nice expansion, right? Because we have so much news drivers here to push price. Looks like a pretty solid week for sure. I agree. I'm the least amount interested on Monday, and I'm expecting Monday to be lower probability, and then hopefully expansion throughout the week. So I always start with dollar. You guys know the drill for those of you that watch consistently the streams. I always start with dollar, and I get an idea of what dollar wants to do. Now last week I was looking at potentially offering fair value on the monthly on dollar because the daily had flipped, right? If we look at the weekly, there's a very small SIBI here that's being respected by price. We had a huge wick up, but the body right now on the weekly is telling the story. So the body is pointing lower at this point, right? The daily, we had NFP, right? We pushed higher, which is something we wouldn't have wanted to see after this wick. Right? After this respect of this candle, I would have liked to just see expansion here towards these lows, which we didn't get. So it's an interesting thing that we're seeing here. We can still sweep this candle's high and respect, which if you look at the body close, the bodies are, as of right now, respecting. And so if the lower time frame order flow from here is pointing lower, I'm still bearish. Right? We have daily order flow pointing lower. We have the weekly respecting the SIBI. And so to me, we may want to offer fair value on the monthly. And I'd be looking at, you know, the area of fair value, potentially a dig into the BISI, but these highs right here, right? That would be where price should offer fair value at. And then from there, I would look for it to head higher. So potentially a pullback. I want to see what happens with dollar though, right? Obviously, if this daily leg doesn't hold and we just expand through, then that bias goes out the window. So for me, dollar is in a bit of a weird spot where I want to see what happens at this area right here. You know, I want to see if we have respected this, order flow continues lower. In that case, we look to target these lows. Conversely, if we just expand through this and order flow doesn't flip on the lower time frames, then we have bullish dollar, and potentially we aren't going towards these lows on the weekly. So it really depends on how price delivers. I'm going to be reacting to what dollar does. It's kind of in a 50-50 spot for me, where the monthly had our bullish fair value gap. We can potentially want to offer fair value on the monthly to head higher off of, and the weekly and daily are confirming that right now. But the daily leg needs to hold, and so we need to sweep this candle high and move lower, in my opinion. So we need to see the 1 hour flip, right? We need to see more order flow confirm that we're going lower. But right now, just need to wait for more data, essentially. I need to wait for more out of price to see if we respect this leg or not. Because if we don't, then that bearish bias may go out the window. And so that's how we flow with price. I'm not demanding what I want. I have no ego. I'm not marrying one bias. I'm just flowing with what the order flow says. What's up, Caprice? So those are my thoughts on dollar, right? When dollar is unclear, that means majors to me are going to be unclear. And I like to wait for clarity on dollar before I start trading majors. I want to ask you how you can identify when to trade from a fair value and when will market will take liquidity and give reaction. It all comes down to top-down analysis. So understanding what fair value gaps will hold is directly correlated to understanding price from the top down, right? So you're finding areas where price, essentially what we're doing is finding areas where price is going to find support, resistance. It's really all it's about. And to be able to do that, you need to understand the narrative from the top down, right? So if price has already offered fair value on the weekly and the monthly, well, then a daily gap, if we're trading higher towards the buy side, should be respected. However, conversely, if we have a weekly gap below that on the monthly or weekly and we need to offer fair value, that daily gap might not hold. And so that's more advanced stuff we talk about all the time, though. And it just comes down to that understanding from the top down of price, which I show every single day. It's baked into my analysis. I talk about all this stuff in all my content. So I would just encourage you to keep watching the stuff that I put out, and you'll kind of get a feel for what I mean by that. But I'm always working my way from the top down, and I'm understanding price delivery, where we've offered fair value and where we're seeking liquidity. So we have a overall bullish monthly trend, right? Monthly bullish institutional order flow. And I want to submit to that higher time frame trend, that higher time frame order flow. As of right now, we're heading higher. Previous week high was my draw last week. NQ hit it. ES did not hit it last week, but we were correct on our bullish bias last week. There's not much to pull from this. Indices have been very low probability, consolidation type of price action. And so for me, my approach has been a lot more deliberate, I guess, per se. What's a good word to... Calculated, I think, is a good word. My trades have been a lot more calculated lately, where I'm pickier and I will have risk on some trades where I feel they're lower probability. Like I'm not fully pressing the gas in these markets right now. So I feel like I've kind of taken a little bit of the foot off the pedal in a sense, and I'm kind of just being more selective about my price action. But I think that's exactly why I was green in January. I think if I went full out, pressed the gas, and took all setups and was just, all risk on entire of January, I probably would have been red in January, because it's just been tougher price action Q1. So understanding and identifying when the market phases change and when things are lower probability, I think is extremely, extremely important. And that's why I've kind of been leaning more towards dynamic risk, where I still have a max risk per day and I have a dollar amount, but I alter what I'm risking per setup based on what I think the quality of it is and whatnot. So there's not much to pull, honestly, from these higher time frames, right? This is just straight chop. We wicked and respected this. Now we have a body pushing higher out. So I'm still bullish biased on indices. I'm looking for higher prices, but it's just super, super ugly. It's not what you want to see out of price action. And so we'll see how this delivers. The 4 hour is going to be 50-50 order flow here when we create this 4 hour gap. Once that gets confirmed. So I want to see how this leg reacts. But Monday looks low probability to me, in my opinion. We'll see what happens. Still bullish biased, but it's just straight chop. And so nothing's falling through. The delivery is just really lacking any intention. So I know that indices are lower probability, and until they give signatures of higher probability conditions, I'm not going to be full risk or pressing the gas as hard. But yeah, everything Q1 has been meh. Besides gold. Gold has been trading pretty nicely. This, where was it? This sweep right here was one of the key signs for me being bullish last week. We swept previous week low on ES, right? So we swept external, NQ, created that failure swing, this SMC on the weekly and daily. And I was looking for a previous week high the entire week. I mean, beautiful, beautiful delivery in terms of my target for the week. We hit our target, then Friday retraced right back into the range. So the way that candle delivered was very textbook. I felt very in sync with price last week. And so we'll see if we want to follow through higher now, right? We swept that previous week high on NQ, and now we're having that deep retracement. But I'm still bullish biased, and I want to see this order flow get back in line with the higher time frame. YM and Russell can be good tips as well too. I mean, it's just straight chop ass. Look at this chop. Like, there's some gaps in here, but this is really just a range on the monthly. Weekly BISI being respected by price. That's nice to see. Potential internal to external. Then we'll look at the all-time highs. Still bullish on indices for sure. I need to see more. I mean, if you really think about what we're trading here with indices, they're made to go up. Like, if indices are consistently selling off, there's something fundamentally wrong with things, right? And even crazy crises like COVID, all of these things, they're just retracements from a macro perspective to continue higher. You know, so we're always inherently going to be bullish bias. These markets are made to go up, these US markets, right? It's important to understand. But yeah, man, that's pretty much, I don't have much to say about indices right now. They're lower probability. YM, we have weekly internal to external potentially, but everything is just chop. And this is the type of conditions where I know not to press the gas. You know, if I'm framing trades, the best trades are going to be framed at the external of the ranges. Something like that. See if there was SMT at these highs. There was, right? So look at this SMT at the daily highs. It could have been a short. So operating at the external of these ranges is very important to understand when you're trading range-bound conditions. I call that range protocol. And so this is my range protocol. I'm just operating at the external of the ranges. I'm looking to trade ideally pro trend, but if not, I'll cut risk and I'll just trade back towards the internal of the ranges. The best way to do it. Oh, it says NQ, but really it's SMT with YM. So it's really important to understand how to navigate these kind of conditions. I want to see order flow get back in line. This is a pretty convincing top here from that sweep, and we're just consolidating. So I'm going to be waiting for more price action. These lows and these lows should be next target, and then I want to see if we sweep those and work right back into the range. That's what makes sense to my brain. Because we've already swept in previous week low offered fair value here. So for me, I want to see us sweep one of these sell side liquidities and then work back into the range because I'm still bullish biased. But just really sloppy stuff, you know. If it's hard to decipher, you know it's lower probability. I'll get to gold. Monthly consolidation, weekly consolidation, right? Daily, I mean, just terrible price action that you shouldn't waste time. Yeah, I'll get to gold, bro. I got you. So monthly flipped on Euro USD. We're waiting for a clear direction on dollar. A lot of just waiting this week, in my opinion, waiting for things to clear up and give more signs, more order flow per se. So dollar, I'm going to be waiting for more to understand a clear direction on dollar. I'm always waiting for a clear direction on dollar to trade majors. You know, I haven't been trading forex. I've purely been trading futures. before the forex, guys. That's important to understand. It just all around, every asset class has been very low probability, and these are your telltale signs of, okay, don't press the gas. Very, very low probability, right? We're not falling through off this daily gap. Now we're getting a body close through, just consolidating, lack of follow through type conditions. I'm just waiting for more price action. Like, to me, I don't need to make sense of this price action or try to navigate it. I just wait for it to clear up. And I think that's something that people really fail to understand. Like, they think they need to make sense of every chart. They think that they need to know where every single chart is going. But the reality is there's going to be times when you just need to wait for more price action. The edge is the ability to get on side and understand what price is doing. And so if you can't figure out what a chart is doing within the first 10 seconds, it's probably low probability. It's an easy way to filter out low probability setups. Now we're getting a weekly flip here. We haven't taken these lows. Just the theme. You guys see the recurring theme here where everything is just consolidation. Gaps are not following through on either side. This SIBI didn't hold. The BISI, we'll see if that holds. But this is seek and destroy type conditions. Overall, weekly bearish order flow. But we need to see higher dollar. Right? So it's all contingent on what dollar is doing. It's very important. Monthly SIBI up here. This looks like a more clear external to internal draw here. But we need to see lower dollar. I would expect this to get invalidated ideally, depending on what dollar does. Potentially bullish towards the SIBI. But these are the type of charts and market conditions where you don't need to overexert yourself. This is the type of stuff where, like I said, use that rule. If you can't get an idea of what price is doing on the monthly, weekly, and daily within like the first 10-15 seconds, it's low probability. SMT at these lows, same thing here where we can look for a retracement back to offer fair value on the monthly. Weekly chop, no follow through. Daily chop. Bullish order flow, though we did get a small gap here and we're respecting it. That's nice to see. AU and NU look more bullish to me, but we need to see lower dollar, of course. So like I always say, everything is contingent on what dollar is doing and the direction of dollar. Canadian dollar, shout out to Joe, man. Monthly BISI. USD Canadian dollar here, right? So this is going to trade in alignment with dollar. If we get lower dollar, we're going to see lower USD CAD ideally, right? Monthly internal, strong retracement here. Daily internal to external played out. This is decent. Looking at those lows, and then from there we're going to be gauging whether price finds support and flips from this monthly BISI or not. It also depends on dollar, like I keep saying, right? Just a lot of waiting, in my opinion, right now. Waiting for more price action, waiting for clarity on dollar, waiting for indices to give a clear direction. More waiting than usual right now. And, you know, that is a skill set that you need to develop and be okay with. That ability to getting found. Yo, Trump is cooking, you guys. Daily SIBI closing above, not falling through. Weekly chop, right? Just low probability conditions across the board. Do not press the gas in these markets, right? This is Q1, low probability stuff. Wait for price to have more intention, have higher probability conditions. Weekly flipping, potentially looking at this sell side here. Daily gap right here for us to trade off of potentially if we want to retest. Otherwise, it may just bag and we look for these lows. Need lower dollar to see lower USD JPY. Just very, very, very shit market conditions. There's no other way to put it. You know, excuse the profanity, but there's just no other way to decipher or not even decipher. There's no other way to articulate it. It's the best way to explain what I'm looking at lately. So just know not to put on too much risk, guys. You know, don't take my word for it. You know, if you need to get burnt by the stove, if you need to experience that, go ahead. But I would encourage you not to do it with a large sum of money. Monthly buy side wicking, respecting that sweep, right? This is a clear sweep of that buy side. Monthly consolidation of crude oil also looks terrible. Weekly, as of right now, not falling through off this gap. This is our overlapping area, so potentially we can fall through from here. But I'm not too convinced in consolidating price action. We'll see if the order flow flips. Now it's getting a wick of that area, which is pretty nice. But yeah, I'm really not too convinced on... When I see consolidating price action, I'm just expecting this to continue to run the external of the ranges. I'm not really expecting gaps to hold like that. And so not all fair value gaps are made equal, and that's something people really fail to understand. If fair value gap in consolidation is not even close to the, you know, a fair value gap in an expanding market, right? So these consolidation style fair value gaps, like in here, it's not even in the same wavelength as this style of fair value gap where we're expanding. It's a night and day difference. And so understanding that is very, very important. But yeah, just a lot of waiting. Gold has been really nice. I don't know if bros, Ruble, if you're in here, I'm looking at gold now. What should we do if price didn't come to fair value gap area and move above the area? It depends on the order flow. There can be breakaway gaps. If price isn't offering fair value at that moment, you're just looking for continuation higher. Monthly internal to external played out, right? We're seeing all-time high type price action on gold. Weekly, no gaps in this weekly, which is interesting. Daily sweeping these highs. Gold's in a weird spot here for me as well, where I'm just expecting accumulation up here. I'm going to expect accumulation at these highs, and then we'll see what gold wants to do. It may just want to expand again right out that accumulation, but at this moment, the way this is sweeping, I'm expecting some consolidation in this area here, and then potentially we just expand out the range. We'll have to see. Right now, there's just not much to do on the weekly or monthly. Expecting some form of consolidation here on the daily. That's what makes sense to my brain. Accumulate at all-time highs. This is all-time high style price action where we expand, we create new highs, then we move into an area of accumulation, then we expand again, move towards all-time highs. That's typical all-time high type delivery. Monthly consolidation, that's the theme. Weekly chop. Not much to gauge here, right? We're sweeping previous week high, whatever. We can try to go in and decipher it, but I'm not interested in trying to make sense of things that don't jump out at me. That's not what I'm in the business of doing. Everything that I do with my trading is streamlined to fit my personality and to save time, right? I didn't get into trading to... I didn't quit my 9-to-5 to work in 9-to-5 trading. I didn't get into this for that. I got into it for time freedom. My model's built to give me time freedom. 9:30 to 12 is when I execute. Outside of those windows, I really don't care other than doing this forecast for you guys. Consolidating at these highs or failing to deliver higher off of this gap, which is not a good sign. We may actually look to target these lows. That's low-hanging fruit as well as these lows. Just consolidation, like I said, expecting consolidation at these highs now on gold and silver. I already answered that question. Monthly, respecting the bullish fair value gap. Weekly, consolidation. What a surprise. Bitcoin's back into lower probability price action after we hit all-time highs, worked right back into the range. Typical as well, like I just said before, all-time high style price action where we're just accumulating at the highs until we potentially expand. We've already offered for value of this leg, so I would like to just see consolidation here and then just run higher again. So you know it's expanding once we get new gaps to the upside. But yeah, everything just very, very low probability across the board. I don't see anything right. There is literally not a single asset class. We just looked at indices. We just looked at forex. We just looked at commodities. We just looked at the major crypto. Nothing here on any of these charts stands out to me, jumps out to me as high probability. And so what does that tell you? It tells you not to press the gas, potentially not to take full risk, or, just understand and take with a grain of salt that you're operating in extremely low probability trading conditions. So be selective with your setups. Be selective with where you put on risk. I've been operating this way for the last 2 months. Like, it's Q1. Price has just been showing consistently that it doesn't want to expand. And these different phases in market conditions are inevitable. It's part of the game. So being able to acknowledge them and pretty much flow with them, understand what they are, and understand when to press and when not to, is just huge. Yup, exactly, Joe. Telltale signs of Q1 PA. I mean, weekly power or yearly power of 3, right? Just accumulation on the yearly candle. If you looked at a yearly candle, this would be like the accumulation in that delivery. Q1 is always pretty ass. But it's all good. We are protecting ourselves. I think that manipulation of risk is very important to understand. That's why I don't like just always being full risk year round, because the market conditions are changing so much. Waiting on dollar, pretty much all around waiting to see how we deliver. Dollar is a bit conflicting here, where we can offer fair value on the monthly. Like I said, we're respecting this SIBI, and we had a lower gap, a small lower gap. Daily is bearish order flow, but I would have wanted to see some nice delivery off this with NFP, which we didn't get. So we'll see if we sweep this candle high and work lower. But right now, order flow is still pointing higher on the 1 hour and 4 hour. So we need to see a flip in respect of this leg. This leg is very, very telling for me on dollar and the direction of where it's going. So I'm just constantly reacting to order flow. I'm reading the fair value gaps, right? I'm reading where price is offering fair value and seeking liquidity. That's really all we're doing. And yeah, with Harmony model, I'll just be picking my shots. Like I said, I put a picture in the Discord of a crossbow, or not a crossbow, someone doing archery, and I was giving the analogy. That's how it feels right now. Like, I'm really just lining up my shots like it's archery. And Dixie is one of those ones that are just gonna, exactly. I feel the same way. Everything is just consolidating across the board. So the people that aren't able to identify that are going to get absolutely slammed, and they probably have been, getting slammed. I'm not trying to be disrespectful, but a lot of these people you see on Twitter are quiet right now. Bro, I answered that question, brother. I'll just go back. What should we do? I'll answer it again if you want. What should we do if price didn't come to fair value area and move above the area sweep? So the third candle of these fair value gaps is what is allowing you to gauge whether or not we should retest the gap or not. And so an example, like right here, of course, we're going back and we're just, nitpicking it or picking it out. But this logic applies in live markets, of course. This third candle, the way that it's forming, we're not expanding. Look at the way this candle closed. If you look at this high and how we swept this high, and we're pretty much getting a consolidation type candle. I'm talking about this third candle, right? It takes 3 candles to create a fair value gap. So to answer your question, I'm always gauging this third candle. If we had gotten a candle like this, where we just expanded on this day, then I'm expecting that to be a breakaway gap, and I'd be looking for follow through off the gaps on the lower time frame. So you can still plan a trade off of a breakaway gap on the weekly. Like, let's say the weekly just expanded. Okay, well, I'm looking to long daily and 4 hour gaps, and I'm not expecting this to get retested right now. But the way this candle closed and the way this candle set up to test this gap told me, at the time, this is likely to offer fair value here. And so I'd be looking for this to trade into that gap on the weekly. And so if there's daily and 4-hour gaps here, well, I'm not expecting them to hold and deliver a price higher. Yeah, you want to wait for new gaps to long off of on the lower time frame. So if the weekly breakaway gaps, look to long off daily and 4-hour gaps, or even stop hunts. See how we traded back into this? The third candle set that up to test it. Now from here, because we traded into that weekly, I would be expecting 4-hour and daily gaps to hold. And I'm looking to long towards this high. So once the 4-hour flips from this area, you expect that to hold. You expect these gaps to deliver price higher. This is obviously just consolidation, but once we get our expansion up, we're expecting this high to go. And so that's how you're navigating this. Versus right now, this is just consolidation, so we're really not expecting these gaps to have fall through. But when we just have large expansions out like this, and we just create breakaway gaps, then the lower time frame gaps are what you can frame your trades off of, because you're not expecting it to offer fair value. Essentially, if you have to take it a step further and ask yourself, yeah, exactly, that third candle, the way that the third candle prints, meaning the way that that third candle closes when it's fully made, and even in the middle of the third candle forming, you're able to gauge what price is trying to do in that moment. What that third candle closure means, if we're bullish, we actually want to see large displacement moves like that. If anything, we wouldn't want to see retracement of that. Yeah, ideally, you want to just see expansion through. Third candles are very, very telling. And it's how you're able to identify, when gaps are going to hold and when they're not. Yeah, you can trade breakaway gaps for sure. If the weekly breakaway gaps, you expect the daily and 4-hour gaps to deliver price higher. If you guys haven't already, by the way, go claim the free course I made. It's entirely free. Talks about the indices model I've been trading. I built this model out for myself. 930 to 12 indices, ES and NQ. We want to see ES and NQ move in harmony, and so this is the model that I've been trading every single day in the Discord. So definitely go check that out. Claim it if you haven't already. It's completely free. There's no catch. You just have to have a WAP account. You get a bunch of free information on the personal model that I trade. So definitely go check that out. You could, that's up for you to decide. Yeah, that's the thing. Like, just because I say to do something, brother, I would encourage you all to be independent thinkers. Be highly skeptical. You might not have good data trading breakaway gaps. You might not feel good trading breakaway gaps. Like, you might just only want to trade tests of gaps. If that's what you want to do, that's what you want to do, right? So I think it's very important to take, your experiences and data and make something out of it. This model right here is what I've made for myself, right? I took all the things that I've learned from other people, all the things that I've studied, all of my experiences, all my data, and I built a model that fits my personality. Berger is one of my close friends. I talk to him about this all the time. Frequency was something that affected my personality a lot. I'm sure Joe remembers me talking to him about not liking the lower frequency I had for like the last 6 months. Going into last year and throughout the year, I had problems mentally with frequency, and it's because the model that I was trading at that time I was profitable with, but I felt so mentally drained because of my personality. And so a big thing for me, and what I like to tell anybody that watches me or is learning from me, is that you need to make these things personal to you, and everyone is different. You might operate way better trading breakaway gaps and making decisions quickly in intraday trading, or you might just want to be super deliberate and swing and only trade tests of gaps and not even implement breakaway gaps into your trading. And so this type of stuff is it's something you have to personally assess. I think that's the best way that I can explain it. Exactly. You have to go into the charts and see for yourself what sticks out to you, collect data, acknowledge how you feel in those moments trading certain types of ways, and that's it. Like, the fair value gaps have always stuck out to me. Internal to external has always stuck out to me since I learned it. And so I built my model around that. I only trade off fresh fair value gaps. To me, once price just even to the tick or point tags a fair value gap, it's no longer fresh. That's how I trade. But yeah, go check this out. Claim it if you guys haven't already, man. It's free. It's a no-brainer. Talks all about my personal model. It's the model I'll be trading this entire year. Show up every day 9:30 to 12, and I just trade ES and NQ. I look for 1 to 2 high probability trades in the direction of the daily expansion. That's all we're doing. But yeah, that's pretty much it. If you guys have any questions or anything you want me to talk about, I'm down. But other than that, I don't really have anything else to give analysis on. I think it's lower probability market conditions across the board, and I won't be taking full risk unless I see a A++ harmony setup and I'm like, this just checks every box. I'm usually going to be half risk. The Super Bowl's later today, so that'll be fun to watch. Already claimed and seen it. Fire, bro. Hopefully you enjoyed that. But yeah, guys, that's pretty much it. If you have any questions, let me know. Hop in the Discord if you haven't already. I'll be in there in the main chat. I'm always in the main chat answering questions. I mean, it's just free access to me. So I don't know why you guys wouldn't take advantage of that. And yeah, man, join the Discord. I hope you guys enjoyed the weekly forecast. I hope you have a good rest of your day. Yeah, like the stream. If you enjoyed the stream, if you enjoyed any of the value or anything in general, just drop a like. I appreciate you guys tuning in, and I'm excited to watch your growth. So let's have a good rest of the week. Start Monday out strong. This next week will be interesting. We got a nice amount of volatility on the economic calendar, so excited. All right, guys, have a good rest of your days.